startups, entrepreneurship, technology, innovation, disruption, anything that has to do with the new economy. Before we go ahead, just a quick alert, folks. Stay in touch with us. Tell us what you want to see on the show, what you never want to see on the show, what you think of today's interviews. Pitch to us. Who knows, maybe you'll even get to be a part of Startup Central. Our email address on top of the screen, startupcentral@etnow.tv. I'm also on Twitter. You can write to me directly. With that, we're going to today put the spotlight on a unicorn. OYO. It's become the third largest hospitality chain, and now the firm, started by Ritesh Agarwal, has its eyes set on co-working. Today, OYO has announced it's going to be entering the co-working space, and it's doing it inorganically. It's doing it by acquiring a firm called Innovate. All of this is actually going to be part of the new real estate business of OYO. Joining me now on Startup Central to talk about OYO's big bet in co-working, which a lot of experts believe could be at a staggering $30 billion as the market matures, is Rohit Kapoor, the CEO of the new real estate business at OYO. Hi Rohit, thanks so much for joining us here at Startup Central. Congratulations from hospitality to co-working. So I got to ask you, you've disrupted the hospitality market. Why are you betting now on the co-working market? What are the synergies? What's the rationale?
Entering co-working, this rationale is to build on OYO's capabilities in the real estate and hospitality space. If you think about it, the core capabilities are around acquiring real estate, transforming them using technology, talent, operating muscle, and there's also a very significant overlap between the customer base who uses OYO, especially the corporate client base, and those who are looking for OYO workspaces. So we believe this is a fantastic opportunity for us to get into a contiguous space and build a very large play around it.
Okay, so that's the rationale behind this foray into co-working. But Rohit, I'm sure you have done a dipstick, more than a dipstick, an exhaustive survey to figure out how big an opportunity it can be. OYO is not the first player in this space. You've seen others, whether it's WeWork, which is in India, you've got CoWorks, for example. So how big is the market? How big is an opportunity that you are seeing for OYO?
So if you think of the market, I don't think of this as a co-working market. We look at the entire office spaces market, and that is to the tune of $30 billion plus as per some reports right now. That's a very large market, and co-working is a very small segment of that. Our current footprint is we have signed more than 15,000 seats in India. We are 21 centers live across 3 brands. We are in 10 plus cities. The ambition is to, in the short run this year, to create 50 centers overall, and over the next 2 years to emerge as one of the most significant players in Asia.
Okay, so co-working can become a $30 billion market, a staggering $30 billion. But Rohit, like I just said, you don't have a first mover advantage. It's a space where you're seeing dominated by the likes of, let's say, WeWorks from the United States. You've got a homegrown CoWorks, which of course has the backing of RMZ. So having said that, how big of the pie are you expecting to grab?
So there are 2 parts to that. One is how big will the office rental market will be, and there are different reports which suggest that many of the cities in India are some of the fastest growing office space market in Asia. So if you take office spaces as a market, our estimate is that this is a 50 billion market 2 to 3 years down the line from here. Co-working is a very small fragment. So my belief is we will see co-working do 2 things. One is to grow the overall category, or to bring a lot more people who are sitting in the so-called informal workspaces today into the formal workspaces through co-working, because this makes things highly affordable. And 2, we will see users of office spaces, traditional office spaces, converting as co-working clients. So in terms of market size, I don't see there's an issue right now. There's a headroom for the next several years for us to grow.
OYO is not just in India, it's gone overseas. Look at the success story in China, a unicorn, the kind of fundraising that we've seen. We know we can't take OYO for granted. Are you going to prove to be a challenger for, let's say, WeWork?
I don't think we base our businesses on challenging any existing player or otherwise. For us, it's very clear in terms of we are an innovative player, we look at markets. Our belief is that the affordable market segment in India and in many other overseas markets is huge. The trend of co-working has been accepted by multiple categories of clients, and our endeavor will be to create a distinctive product which adds value to our clients every day. The market is wide enough for multiple players, and that's something that I personally don't focus on, and that's something that at OYO we don't focus on.
That's a nice diplomatic answer. Focus on your own work. But Rohit, you're making this entry into co-working with an acquisition. Inorganic growth is the way you've decided to enter this new business. And you're doing this by buying out a firm called Innovate. Tell us about Innovate. How much did you pay for it? How big is Innovate? With this, what happens to your portfolio immediately? For example, how many centers, how many seats at these co-working stations, what kind of clients?
Right. So Innovate today is about 6,000 plus seats live across 13 centers all over India. Having said that, we look at Innovate as part of a multi-brand portfolio today, and Ritesh Malik, who is the founder of Innovate, and the entire team has joined us. They're very much a part of OYO today. About 150 people have joined. Overall, as I said, that we want to grow to over 50 centers by the end of the year across the 3 brands. Innovate will continue as a brand, and it remains a significant part of the portfolio for us.
Okay, so that's what Innovate gets you, organic as well as inorganic growth. Rohit, how is OYO going to disrupt the office market? You've done it in the hospitality space, not just in India, but overseas in Asia as well. How do you plan to do that in the co-working space?
I like to use the word innovation more than disruption, and our endeavor is to make sure that we innovate according to what the client needs today. And I'll just give you a few examples on where we believe next wave of innovation will come from, and we hope to drive that. Today the co-working is seen as a product which belongs to only a certain class of clients. While that is true, I believe we have an opportunity to bring in clients who are not traditional users of co-working or flexible workspaces into our centers by really understanding the needs. So just to give an example, today if you think of an architect or a professional services, any kind of person who's into professional services, they may not see co-working as a natural extension of their workplace. However, if you go down and think that what they truly need in a place like that, and create products at the right price point, that makes a huge difference. So that's why you see that there are three distinctive things about us. One is that we have entered the market with a multi-brand portfolio. You will not find many players doing that. That's because we believe there are, in the affordable to mid-market segment, there are multiple opportunities there. Second is we have a combination of inorganic and organic strategy. We acquired Innovate, but we also launched organic brands. And third is in terms of the price point, we are absolutely focused on making sure that we create enormous value for our clients by making workspaces extremely affordable.
Trust a disruptor to say they don't like the word disruption, they prefer innovation, but that's a good insight. It basically shows you don't take things for granted. Having said that, Rohit, you were just saying attractive price point. I'm sure everybody can guess my next question. What are these price points that we can expect at the OYO co-working stations?
So my sense is that depending on location and market, our focus is to be in the 6,000 to 10,000 rupee category per seat, and that gets you everything that you need to run a fully functional office, which includes space, customization, furniture fixtures, services, Wi-Fi, power backup, F&B, you name it. I think the whole idea is that you take all the pain points of a client and create an ecosystem where they can really focus on what they should be doing, is to serve their clients and keep their employees happy.
Ladies and gentlemen, so now you know how much a co-working station is going to cost you when it comes to OYO. But Rohit, tell our viewers, when you look at these price points, are they disruptive? What I'm trying to also ask you is that are they highly competitive? Are they cheaper than, let's say, your competitors? Are they cheaper than the fixed head cost if I was to go with, let's say, traditional office space?
Yeah, so I think that's something that it's not about disruptive pricing. I think it's about offering the right value at the right price, and we do believe if you look at Indian market, 65-70% of the market is in that segment. So our focus remains on creating an outstanding experience and a workspace at price points which are at least 20-30% lower than what you'll find at for similar products.
Well, there you go. Now you have an idea of the pricing that OYO is targeting. How are you going to be funding all of this, Rohit? Shed some light on that. Yes, you're a unicorn. We just saw a recent fundraise, a successful one at that. We've seen Airbnb, for example, invest in OYO as well. But how is this new business going to be funded?
At this point, it is funded by the parent company, which is Rationale, and it is part of the fund spend plan in India that we disclosed, about 1,400 crores, which we released a couple of months back. So this expansion is very much part of that fundraise.
Okay, so no specific fundraise when we talk about co-working. But Rohit, can you give us an idea as of now, post the acquisition and the deal that you have with Innovate, which are the kind of clients you're going to have already on board?
So I think that's been a fantastic addition because of Innovate coming into the OYO family. We not only got in Ritesh Malik, an outstanding founder who has created the Innovate brand, a team of 150 people and a slew of clients who are been loyal to the Innovate brand for 2-3 years now since they started. So we have a wide range starting from freelancers to Series A startups to Series B, C, D, E to multinationals. We've got those relationships, more than 300 clients right now with us because of the Innovate acquisition.
What about overseas plans? Will you enter China, for example? Look how OYO is doing so well in China, considered to be the dominant player. Is that the game plan as well? Take this business overseas?
At this point in time, we are focused on making sure that the Indian operations scale up to what I've already disclosed, but at some point we will consider expansion into other Asian markets as well.
Okay, so the focus right now in India. Having said that, can you shed some light on what your boss and the founder of OYO has instructed you? What are his targets as far as this new venture goes? Has he given you targets? Has he given you milestones when it comes to the co-working space business?
I think, look, in my discussions with Ritesh, the focus also always has been creating a product which makes workspaces highly affordable and at a great quality. I think that has been the focus of most of our conversations and discussions that we do. It's not always about scale, it is about the product. In terms of scale, I think we will be very much shooting to create 50 centers up from 21 right now over the next 4-5 months, which is this calendar year.
Globally, we've still not seen co-working companies enter the green. They're being seen as a cash guzzler. Look no further than WeWorks. It wants to go in for an IPO, but it's going to do that by making a pit stop at the debt markets. Over $2 billion is what the Wall Street Journal had reported. So looking at all of these companies, these kind of examples that you have, not just in India but overseas, I'm sure there's a lot that you have studied, a lot that OYO can learn from. What are some of these lessons? How will you prevent the new business from being an absolute cash guzzler?
So it is not for us. I think that's something which we have been very focused on. Those situations arise for whoever it is because of very expensive leases or models which are not tuned to the market. For us, we are very, very conscious in terms of where we are acquiring the lease, what rates are we acquiring it at, how much we are spending per square feet in those locations, and some of those numbers are absolutely industry beating for us. I can't disclose them to you right now on this call, but unit level profitability, center level profitability is super important. Most of the mature centers of Innovate run at more than 85% occupancy. We see some of our centers getting signed up even before launch because of the product and the value that we are offering. So while scale will always be there, I think unit economics and profitability is absolutely prime focus. I don't think any example or generalization of that nature which you asked the question on the basis for is applicable to us at this point in time.
Ladies and gentlemen, you're getting some idea of what the business model is going to be, some insights that are coming in. Rohit, are you going to spin this off into a new entity? Is that the plan?
So it depends on how you see OYO. Today OYO is the third largest hotel brand in the world. It instantly also is one of the largest co-living players in India. We have a vacation homes business in Europe and in India, and we see the, real estate as a wide and a deep opportunity. Co-working is definitely a part of the mandate. We don't see in terms of spinning it off or any other action of that nature at this point in time. I have nothing to share. It is very much a part of the OYO franchise. Innovate has also become a part of OYO. The team sits out of OYO premises most of the times. It feels like they've been there for a very long time and not just recently. I think we are very excited about what you're building right now. Our focus truly is making sure that the product is right, the markets are right, we get our leases at the right prices, and we offer great value to our clients. I don't think we are focusing on anything beyond that at this point.
Okay, so no plans for a spin-off. Rohit, you head the new real estate businesses at OYO. Give us some idea of what else we can expect from OYO when it comes to the real estate business.
I think we have shared the entry into co-living and co-working. That's a lot for quarter. For what else can we expect? I think we'll always be proactive in sharing what we have to share with the media at the right time.
To be fair, I was actually just trying my luck over there. You don't ask, you don't get. I didn't think that you were going to reveal your new business plans right here on Startup Central. I was just hoping. But having said that, the real estate market has been dead for over 10 years. The property market still going through one of the worst down cycles that we have ever seen. You're entering a new business in the midst of that down cycle. How are you going to hedge yourself?
So for us, I think we want to design a business which is fairly resilient to cycles, and both on the co-living and co-working side, we are very conscious of not over-exaggerating either a downturn or upturn in real estate prices or leases. So it honestly doesn't influence our day-to-day thinking on what the condition of the real estate market is.
Before I let you go, you said you don't like the word disruption. You guys at OYO prefer the word innovation. So with this innovation, are you also going to perhaps be a challenger to, let's say, the DLFs and the Rahejas of the world? What I'm trying to understand is that the traditional office providers need to be wary of not just OYO, but this growing phenomenon of co-working.
I think the co-working product and what we attempt to create does create value for a variety of clients, be it freelancers to large companies. Whether anybody needs to be worried about us doing anything, I don't think so. Many of the names you have mentioned could be partners in as we build further out. And look, the market is large enough. India is an economy which, as you read, is headed towards the $5 trillion mark. It requires a lot more companies to innovate and build large businesses out of India. That's what OYO has done on the hospitality side. As you know, as infants and babies in the OYO system, my desire is that we focus on absolutely right thing, which is making sure we get great talent, great technology, and focus on our clients. I think if we do that day in and day out, scale is an outcome and not a pursuit by itself.
But with that, Rohit, I've got to say that was a very diplomatic answer, but I've got to thank you for joining us here on Startup Central, for being so candid on what we can expect going forward as far as OYO's new business goes. There you go, folks. That's OYO, the unicorn, after conquering the hospitality market, venturing overseas, is entering a new space, co-working space. That was Rohit Kapoor, the CEO of the new real estate business, taking you through all of the details. With that, we're going to take a short commercial break. Stay tuned. We've got a lot lined up for you on the other side, including a special from Vani Kola from Kalari Capital, who's going to be sharing how you can perfect a pitch that you make to investors. Stay tuned.